The guy in the Lamborghini with all those monitors, he's probably selling you a course and not living off the P&L. What if I told you that staring at the charts is actually making you worse at trading? People come into the market thinking they need speed, more trades, more alerts, or even more screens to get better at trading, but that's not the case. A study by Brad Barber and Terrence O'Dean found that the most active traders underperformed the market by 6.5% per year on average, which means they got worse every time they traded. So today I'm starting this free full swing trading series, and in the first video we're going to be using this mirror board to go over the basics and introduction to explain what swing trading really is and how effective it is in the market. Swing trading is really simple, and we're trying to trade moves that take days to weeks and not minutes. We're looking for multi-day to week trades instead of looking at a second or a minute time frame. We don't want to be glued or attached to the screen. We make our decisions before the market opens, mark out our key levels, and then let the trade play out. So swing trading is not fast, it's not exciting, but it's very effective if you're disciplined. The big goal with this is to buy or sell with the goal of catching a bigger move. We want to hold trades overnight, and decisions are made before market opens, not during the chaos, not during all the volatility. So markets don't move in straight lines, and we know that. And we like to know that big money builds positions over time. Not everyone can stare at the charts all day, so this is why swing trading is a big advantage in the market. Now I want to be real with you guys for a second. Day trading is not what Instagram makes it seem like. The guy in the Lamborghini with all those monitors, he's probably selling you a course and not living off the P&L. And I say this because the statistics are brutal. They're horrific. Day trading is unprofitable on paper. The SEC did a back study for day traders, and they found that 70 to 80% of them lose money and 99% of them quit within the first 3 years. And only about 1% of day traders actually turn out profitable year after year. So swing trading will flip all of that. We're not going to be fighting against the algorithms. We use structure, patience, and levels to find actual edge in the market. Swing trading exists because patience pays more than speed. Day trading is fast, it's high pressure, and it requires you to be constantly right, and it's a mentally draining activity. Scalping is even worse because you're on a smaller time frame with those higher risks, and you end up losing a lot more in the market. But swing trading, we're on a daily time frame. It's a lot slower, it's less stressful, you're going to be taking less trades, and we catch larger moves. This is why I compare day trading and swing trading. Fewer decisions in the market is going to lead to fewer mistakes, and that's super important in consistency for long term in the market. I read this book by Mark Douglas, Trading in the Zone, and I wrote down in my notebook that the best traders have no fear. They've developed mental flexibility to flow in and out of the trades based on what the market is telling them. So swing trading is going to give you more space to actually think about the market, where day trading you're highly emotional. You're going to be entering every minute, every 15 minutes, and you're leading yourself to emotional mistakes where you will mess up consistently, and it will lead to larger losses sometimes. The way we swing trade is we have a whole entire flow plan. We want to create a bias and a plan with the news, structure, and levels that we see in the market. So we're making decision-based entries. You guys can see when we do enter, we are looking for a breakout, a pullback, or even confirmation for our trade. And when we hold these trades, we want to hold them for days, weeks, and we ignore the chop and we let price do the work. We don't like to look at the P&L. We like to look at our levels and the actual chart and just let our trade play out. And we exit when the target is hit, when there's a structure shift, or when the momentum in the trade fades. This is going to help us stay on track. It's going to help us stay disciplined, and this is how you should take every trade in the market. Like we've mentioned before and went over, swing trading is a lot slower. There's less stress, there's fewer trades, and it requires a lot of patience. Day trading is super fast. It's high pressure. You get a lot of trades, and you're really emotional during it. Scalping's even worse, like I said, where you're on the charts from seconds to minutes. You're getting tiny moves, and you need to be highly accurate on a smaller time frame. I don't trade futures because I have to leverage a lot heavier. There's fast losses, and it requires a lot more of a precision timing rather than just letting my entry do the thing and letting my patience pay me. Like I put over here, if you need action every 5 minutes, swing trading is going to feel boring. If you're coming from day trading, you guys are going to see that you don't have to enter 3 to 5 trades every day. You guys don't have to be scalping the market. You don't have to revenge trade or reverse a position. You just enter your position that you marked out the day before, and you let it play out for days to weeks. Scalping is going to reward the speed. So if you're really fast, you're on a smaller time frame, it's going to reward you for that. But swing trading is going to reward the discipline. It's going to reward you for holding it a lot longer and watching it on a higher time frame. Scalping can lead to faster losses compared to swing trading. Swing trading is thinking first, and it's not reflex first. We go into the market with a plan, we're able to mark out levels, and then we enter and we hold these positions, like I said, for days to weeks. I'm going to be honest, swing trading isn't for everyone, and I want to tell you guys that right now. If you need constant action, you need daily wins, or you feel like you're going to panic when the market goes against you, swing trading is not for you, and it's going to be a lot harder for you to stay disciplined in the market. Swing trading is for people who have a job or have school. They can wait days for results, or they like planning more than reacting. So these people like to follow rules, and they don't need constant dopamine in the market like day trading does, where you're constantly taking action. Swing trading is not for people who overtrade. It's not for people who need daily wins, and it's not for people who panic overnight. All swing trading does require is 30 to 60 minutes of prep. It's got minimal chart watching through the day, and weekly you just need to review your positions and adjust your plans. But what you really need to swing trade is a clean chart. You need to have a good directional bias, levels that matter, and patience. You want clean charts because we don't want mess on the charts, we want clean direction. That direction is going to tell us if we're trending or if we're guessing in the market. And we use those levels as entry points. So we use support and resistance on a higher time frame because we are targeting moves on a higher time frame. And we like patience because, again, our trades are going to take days to weeks. We do not want to exit the position by the end of the day, the next 2 days. We want to let our trade play out and play level to level. My advice to you guys is that the most successful traders are all swing traders or investors. Nobody's watching the charts on a lower time frame. I want to give an example like Warren Buffett, where he's holding positions for years. That gives him an edge in the market where he's able to make a lot more money than all of us just by being patient and sitting on his hands. The main idea or goal of this is to approach the market with patience and a good structure. This is the same framework and foundation that I use to swing trade, and this is why my system works so well. That's the foundation. Swing trading exists because patience will always pay more than speed, and I'm going to prove that to you guys throughout this entire series. Next video, we're going deep on market structure and how we actually read the market. I'm going to show you guys how I build a directional bias before the market opens. And if you don't know where price is going, nothing else matters in your trade. Click the next video in the playlist, subscribe if you're new, and let's get to work.